Have you ever thought about making your money work for you? It's not a far-fetched idea. In fact, it's called investing, and it's a journey that can lead you to passive income. Now, I know what you're thinking. Investing sounds risky, complicated, but it doesn't have to be. With the right knowledge and a little patience, you can turn those fears into financial freedom. So are you ready to take the leap? Let's dive into a simple, proven method of investing: broad market index funds. So what exactly is a broad market index fund? Good question. Picture an investment basket filled with a diverse mix of stocks or bonds that represent a broad segment of the market. That, in essence, is a broad market index fund. It's like having a mini version of the entire market in your portfolio. The beauty of these funds lies in their simplicity and diversification. Instead of trying to pick individual winners, you're spreading your bet across hundreds, sometimes thousands of different companies. This diversification can reduce risk and make your investment journey smoother. Moreover, broad market index funds are generally low cost. Why? Because they're passively managed, meaning they simply aim to mirror the performance of a specific market index rather than trying to beat it. This passive approach keeps management fees low. Now that we know what a broad market index fund is, how do we make it work for us? Stay tuned, that's up next. Investing in a broad market index fund can be broken down into 3 simple steps. Let's start with step 1, selecting a fund. A broad market index fund is designed to track the performance of a specific index, like the S&P 500 or the Dow Jones Industrial Average. There are many funds out there, each with its unique features. Some focus on certain sectors like technology or healthcare, while others offer a mix of stocks from various industries. When selecting a fund, consider your investment goals, risk tolerance, and the fund's past performance. But remember, past performance is not indicative of future results. Moving on to step 2, opening an account. To invest in a broad market index fund, you'll need to open an account with a brokerage firm. There are numerous brokers out there, from traditional firms like Charles Schwab and Fidelity to online platforms like Robinhood and E*Trade. Each platform has its pros and cons, so do your research to find one that aligns with your needs. Once you've chosen a broker, you'll need to provide some personal information to open an account. This typically includes your name, address, social security number, and employment details. Finally, step 3, buying shares. After your account is set up, you can start investing in your chosen index fund. To do this, you'll need to place a buy order. This involves specifying the number of shares you want to purchase and the price you're willing to pay. Once your order is processed, congratulations. You are now a part owner of the companies represented in your index fund. Investing in a broad market index fund is a relatively straightforward process, but it's not a set-and-forget strategy. You'll need to monitor your investment regularly and adjust your strategy as needed. But don't worry, we'll cover that in the next scene. Congratulations, you've just made your first investment in a broad market index fund. But how does this investment actually generate income? Well, the magic lies within dividends and capital gains. When you invest in a broad market index fund, you're basically buying a small piece of each company in that index. So when these companies make a profit, they often distribute a portion of it back to their shareholders in the form of dividends. Similarly, capital gains arise when the fund sells a security that has increased in value. The profit from this sale is then distributed to the shareholders. Now here's where it gets interesting. If you choose to reinvest these earnings back into the fund, you are buying more shares without spending a penny more. This leads to compounding growth, where your earnings start earning too. It's like a snowball rolling down a hill, growing bigger and faster with each roll. As you can see, investing in a broad market index fund is a simple and effective way to make your money work for you. So, are you ready to start your investing journey? We've just delved into the world of broad market index funds, a great way to diversify your portfolio and generate income. Remember, the beauty of these funds is their accessibility and potential for steady growth. Investing doesn't have to be a daunting task. With the right knowledge and consistent effort, you can watch your wealth grow. Don't forget to subscribe for more financial advice and tips. Remember, the key to successful investing is knowledge and consistency. So keep learning, keep investing, and watch your wealth grow. See you in the next video.